Your business can make $100,000 in sales and still go broke. Sounds impossible, right? But it happens more often than most entrepreneurs realize. Picture this. A business owner opens every single day. Customers keep coming in. The phone is ringing. New orders are arriving. The sales numbers are growing. And from the outside, everything looks successful. But behind the scenes, there was a completely different story. Payroll is due in 3 days, but there is not enough money in the bank account to cover it. Rent is coming up. A supplier is waiting to be paid. And despite record sales, the business owner is stressed, borrowing money, and wondering how the company became so busy, but still so broke. So how is that possible? How can a business be making more sales than ever and still struggle to survive? The answer often comes down to one thing: cash flow. A business can have customers, revenue, profit on paper, and a growing reputation. But if money is not moving through the business at the right time, even a successful-looking company can face serious financial pressure. In this video, we're breaking down 7 cash flow secrets that can help you understand where your money is going, protect your business from dangerous cash shortages, and build a business that doesn't just look successful, but is financially healthy enough to survive and grow. If you're an entrepreneur, freelancer, small business owner, or someone planning to start a business, pay close attention, because the difference between a busy business and a financially healthy business could change everything. Before we get into the 7 secrets, there are 3 words every business owner needs to understand: revenue, profit, and cash flow. Revenue is the total money your business earns from sales before expenses are deducted. Profit is what remains after your business expenses are subtracted. Cash flow is different. It's the actual movement of money in and out of your business, and, most importantly, the money available when bills need to be paid. A business can generate high revenue and even show profit on paper while still experiencing a serious cash shortage. Why? Because profit on a report doesn't necessarily mean the money has arrived in your bank account. And when payroll, rent, suppliers, taxes, or loan payments are due, it's cash, not revenue, that keeps the business moving. Now, let's get into the 7 cash flow secrets. Cash flow secret number 1. Revenue is not the same as cash. You can make $20,000 in sales this month and still struggle to pay a $2,000 bill. Why? Because sales are not always cash in your bank account. Imagine you run a small design agency and sign contracts worth $20,000. That sounds like a successful month, but if your clients are paying in 30 or 60 days, that money may not be available when you need it. Meanwhile, payroll, rent, software subscriptions, and other expenses don't wait. This is how a business can look successful on paper while the owner is stressed, borrowing money, or struggling to pay bills. Revenue tells you how much you have sold. Cash tells you what you can actually pay for today. Never confuse the two. Cash flow secret number 2. Watch where your money is going. Many business owners focus heavily on how much money is coming in, but pay far less attention to where the money is going. That's where money quietly disappears. Unused software subscriptions, services you no longer need, bank fees, unnecessary purchases, small recurring expenses. Individually, these expenses may seem harmless, but over time, they can quietly drain thousands from your business. At least once a month, review your expenses and ask yourself one simple question: is this expense helping the business grow, operate efficiently, or generate value? Or am I simply paying for it because it has become a habit? Small financial leaks can eventually create big cash flow problems.
Cash flow secret number 3. Control your accounts receivable. Accounts receivable is simply money that customers or clients owe your business, and this is where many successful businesses get trapped. Imagine completing a $15,000 project. The work is finished, the customer is happy, and the invoice has been sent. But the customer takes 45 days to pay. Meanwhile, your employees still need to be paid. Materials must be purchased. Fuel, equipment, rent, and other expenses continue. Strong sales mean very little if the money connected to those sales is delayed. Set clear payment terms. Follow up on overdue invoices. Consider deposits or milestone payments for larger projects. And, where appropriate, create incentives for faster payment. Getting paid on time is not just convenient, it can be essential to protecting your cash flow. Cash flow secret number 4. Separate business money from personal money. Mixing personal and business money can make it almost impossible to understand the true financial health of your business. Imagine running an online store and using the same account for customer payments, groceries, personal shopping, and business expenses. At the end of the month, how do you know whether the business actually made money? You may have sales, but without clear separation, you cannot accurately see what belongs to the business and what belongs to your personal spending. Use dedicated business accounts where appropriate, track business expenses separately, and create a clear system for paying yourself. Financial clarity begins with financial separation. Cash flow secret number 5. Build a cash reserve. Business is unpredictable. A slow season can arrive unexpectedly, a major client can cancel, equipment can break down, an unexpected expense can appear at the worst possible time. Without a financial cushion, business owners may be forced into panic decisions, expensive borrowing, or sudden cuts that damage the business. That is why building a cash reserve matters. A commonly used rule of thumb is to work towards several months of essential operating expenses, although the right amount depends on your industry, business model, expenses, and income stability. You do not have to build the reserve overnight. Start small. The goal is to gradually create a financial cushion that gives your business more time and flexibility when unexpected problems appear. A cash reserve is not money sitting around doing nothing. It is breathing room. Cash flow secret number 6. Understand your profit margins. More sales do not automatically mean more profit. Imagine a bakery doubling the number of cakes it sells. That sounds like growth, but what if the cost of ingredients, packaging, delivery, and labor also increased? The business could be working twice as hard without significantly increasing the money it actually keeps. Higher revenue with weak profit margins can create even more pressure on cash flow, because the business may need more money up front to produce and deliver its products. Know which products or services are truly profitable. Review your pricing, understand your costs, negotiate with suppliers where possible, and focus on the areas of your business that generate healthy returns, not simply the most activity. Being busy is not the same as being profitable. Cash flow secret number 7. Forecast cash flow before problems appear. This is the difference between reacting to financial problems and preparing for them. A cash flow forecast is a simple projection of the money you expect to receive and the money you expect to spend over the coming weeks or months. Instead of waiting until your bank account is almost empty, you look ahead. Imagine you know that a major client payment may arrive late next month, while taxes, insurance, and other major expenses are all coming due. If you see the problem early, you have options. You can follow up on the invoice sooner, delay a non-essential purchase, adjust spending, or explore financing before you're forced to make a decision under pressure. Businesses that regularly forecast their cash flow are better positioned to identify potential problems before those problems become emergencies. The earlier you see the financial pressure coming, the more options you have.
Now let's take a look at the psychology that can destroy cash flow. Let us talk about something most financial content ignores, which is the part of cash flow that numbers alone cannot explain. That is psychology. Money decisions are emotional, and one of the most dangerous feelings in business is the feeling of success before the financial foundation is actually secure. When sales increase, entrepreneurs naturally feel optimistic. The brain starts telling you the business is growing. It is time to hire. It is time to upgrade. It is time to buy better equipment. It is time to expand. But cash flow does not care how successful you feel. Cash flow asks a much simpler question: how much money is actually available when the bills arrive? This is where many business owners make dangerous decisions. They confuse increasing sales with increasing financial strength. They confuse activity with progress. They confuse being busy with building wealth. A business can have more customers, more orders, more employees, and more revenue, and still become financially weaker if spending grows faster than cash.
The businesses that survive long-term are often not the businesses making the most noise. They are the businesses run by owners who are willing to look honestly at the numbers, control their emotions, protect their cash, and make decisions based on financial reality rather than excitement. Because being busy can make you feel successful, but healthy cash flow gives your business the ability to survive. So how do you put these 7 secrets into practice? Start with this simple cash flow health checklist. Track exactly where your money is coming from. Track exactly where your money is going. Monitor outstanding invoices and follow up on overdue payments. Separate fixed expenses from variable expenses. Know the profit margins on your most important products or services. Build a cash reserve even if you have to start small. And finally, look ahead. Review upcoming taxes, payroll, loan payments, subscriptions, renewals, and other major financial obligations before they become emergencies. You don't need an accounting degree to start doing this. You need consistency, and you need the discipline to look honestly at your numbers, even when you don't like what they're telling you. Here's the lesson I want you to remember long after this video ends. A busy business gets attention. A cash flow healthy business creates stability. Revenue can make you look successful. Profit can make your business appear strong. But cash flow determines whether you can keep paying your bills, survive unexpected problems, and continue operating when things get difficult. The goal is not simply to generate more sales. The goal is to build a business that knows how to keep its money, manage its money, and use its money strategically. Because busy can make you tired, but healthy cash flow gives you options, and options create freedom. Before we go, I want you to think about 2 questions. First, is your business generating real cash, or are you simply generating sales? And second, which of these 7 cash flow problems do you think hurts business owners the most? Late payments, unnecessary expenses, poor profit margins, mixing personal and business money, or something else? Drop your answer in the comments. I would genuinely love to hear your experience and perspective. If this video helped you understand business money differently, hit the like button. Share this video with a business owner who needs to hear it. For more practical lessons on money, business, investing, wealth building, and the psychology behind financial decisions, subscribe or follow us on this channel. And remember, a business can look successful from the outside while struggling financially on the inside. Don't just build a busy business, build a financially healthy one. I'll see you in the next video.